long-term bond prices remain at very, 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 very low prices. The PPI was pretty much a snoozer event. And on top of that as well, we actually had the treasury auction yield being fairly much the highest for about 2 decades. What does all of this mean? Well, stay tuned and find out all of the details, and we'll go through the charts and figure it all out. Hello and welcome to Strategic Markets, and we are here for the weekly update. You'll just have the pleasure of my company this week as we look at this particular weekend's update. Yash is away for the weekend, going up north and enjoying the air show. So we'll let him go and have some fun with all of that, and we'll go through the charts and we'll see exactly what's been going on for the remainder of the week since we actually saw you on Wednesday. So let's take a look in terms of this particular chart, which I personally feel is still the chart of the week. And we've been saying this a few times in terms of the bond chart. So this particular chart, for those who are new to this channel, is looking at the 20-year plus TLT Treasury Bonds ETF that's over in the United States. As you can see, we've really got a downtrend that's in place, looking at both the left and right-hand sides of the chart. The right-hand side, for those who are new, is basically the moving averages and looking also at, say, the VWAP chart, VWAP indicators as well. VWAPs basically being the pink line in terms of the quarterly VWAP and the green line being the yearly VWAP. As you can see, everything in terms of the short-term moving averages and all the long-term moving averages are pointed downwards. So we really have a very clear downtrend. The left-hand side is the Ichimoku curve. And on this side, we've also got lower highs and lower lows with a lagging indicator, as well as the Tenkan Sen blue line showing a very, very distinct downtrend, and the baseline as well, also known as the Kijun Sen, basically being a downtrend as well. Now, what does all of this mean though? Well, essentially, in terms of the bonds, the long-term bond market is in a firm downtrend. And this corresponds with rising interest rates overall, which I'll show you in terms of the TNX being the 10-year Treasury note yield. And you might be saying overall, well, we're not really seeing any of the actual interest rates rising over the United States. And essentially, yes, you are completely correct. But we'll go into some of the fundamental aspects in relation to this. Essentially, we saw CPI situation earlier in the week, and I won't go into too much of the details behind all of that, which was covered on Wednesday. So you can always go to that particular video and have a discussion there. But we also had the PPI. In terms of the PPI itself, that is in terms of what they call the PCE inflation, and that is basically taking a look in terms of production, in terms of actual products that are produced over the United States itself. And that essentially was unchanged for the month. Everyone's pretty much surmising that that is dimming rate hike odds. So you're probably looking at me and going, well, you're talking about interest rates actually rising from what the charts are basically saying, but overall, there's no change in terms of consumer product, US producer prices. So what's all this talk about? These are underlying situations in terms of what's actually going on in terms of yields and also in terms of what people are willing to pay for the bonds themselves. Bonds themselves, people invest in these bonds and they get a guaranteed rate of return over a certain period of time. Those charts we were talking about a few moments ago were looking at long-term bonds, and you can get a rate of return every year from as long as you actually hold those bonds themselves. So that's the kind of thing that people guarantee themselves for. Rather than investing in the markets, they actually invest in those bonds, get that guaranteed rate of return on a monthly basis, and they can keep on holding those bonds as long as they like. So if they prefer, they can hold those bonds rather than, say, investing in the share market. So that's the kind of thing that they do. Now, overall, though, the more that people actually purchase those particular bonds, they're having a bit more faith in the economy. But like we were actually mentioning during the week as well, and we'll go back to the chart itself, if we go back to the actual TLT, we're actually even surmising as well, are we potentially getting a floor in these bonds where people will basically say, well, you know what, we're actually happy getting that particular yield. Then in that way, if we're actually happy in getting that yield, we'll start buying them. And that may actually now potentially actually start to build a floor where people will actually keep on buying these particular bonds, and we may actually start seeing the rise in the price of these bonds. And then we actually start seeing the unit price get up above some of these short-term moving averages, maybe even this quarterly VWAP, and then we start seeing a reversal in this downtrend. That's potential. Should we see that, bonds are actually inversely related to the yields themselves. So the yields in terms of how much people would get paid for those bonds as well would then start actually declining. That would also conversely also relate to interest rates coming down as well too. We could be starting to see that, because what actually did happen towards the end of the week as well was there was actually an auction for 10-year and 30-year treasuries. And it was the highest that was seen in about 20, 25 years for both the 10-year and 30-year bonds themselves. So in terms of those auction yields, people were actually getting fairly high yields themselves, and you can see that down below in this particular article. People for the 10-year notes were actually getting 4.68% yield on the 10-year note, and for the 30-year note, they were getting 5.2% yield. So highest in about 20, 25 years in relation to those. And maybe what's going on is people will start buying those, and people will start getting interested in terms of bonds themselves and start potentially pushing the prices of bonds going up, and that could actually end up seeing the Treasury note yield itself coming down. Let's wait and see what does happen. But what does that mean for the markets overall? Well, for those who have been following along with this channel, you would basically see that it relates quite significantly to the Russell in particular. The Russell is composed of the small cap stocks in particular. These relate very much to borrowing capacity. As small cap stocks, they really require a lot more funding, and they go to the actual banks, borrow in terms of actually getting more funding, and they're more susceptible to high interest rates. So as interest rates rise, these will generally fall in value in terms of the small cap stocks. Interestingly enough, though, we actually seeing the Russell actually strengthening, and they actually formed all-time highs towards the end of the week even as the interest rates on the yields rose. That is fascinating overall. But maybe they're listening to the headlines more than the actual bond market itself. Are we actually heading into dangerous territory here? Let's wait and see how this all goes. There is still a little bit of an overextension away from the short-term moving averages, as you can see, and even away from the 50-day moving average here being that blue line. So that could be very fascinating. If we look at the IWM, we'll get an idea in terms of the quarterly VWAP as well. Now, the IWM is just the ETF for the Russell. And you can actually see that's that quarterly VWAP, and that's rising as well. But the unit price for the IWM is actually far away from that quarterly VWAP. This is no surprise for anyone who's been following the channel for quite a while. So if you're not a member in terms of subscribing to the actual channel already, be sure to actually hit that subscribe button, follow along, and get some regular updates to be able to see exactly what's going on in relation to all these ETFs as well, and in terms of all of these indices. Now, how does it relate to all the other indices? That's the other side of the coin. Does the Russell have the power to push up all the other indices? Normally, you have that type of thought that, one ship raises all the others as well in terms of the tide and so forth. Well, overall, things are looking pretty rosy for a lot of the other indices as well too. The SPY did actually rise as well, doing pretty well, did actually reach all-time highs towards the end of the week as well. You can see that on the Thursday. So not too bad there either. But are we still overextended from all of these short-term moving averages? Well, you take a look over at the Ichimoku curve on the side here, higher highs, higher lows, things don't look like they're actually in any danger at this point in time. So unless that trend changes, it doesn't seem to be anything to be concerned about at this point in time. The Qs, being the tech-laden stocks, haven't reached all-time highs at this point. And for those who've been following the channel, well, this is no surprise either. We've been covering this for quite some time. The interesting thing with this is that even though we are actually extended away from these short-term moving averages at this point, the lagging indicator here has actually broken through this Tenkan-Sen blue line here and is actually showing some reasonable strength. So we are starting to get a little bit more in terms of some strength here in the tech areas. But there is one area that we do need to really keep an eye on. And the area of concern, if anything, is now actually the Dow Jones Industrial Average. Now, remembering, The Dow Jones Industrial Average composes of about 30 stocks. So we're looking at a smaller chunk of the market, but these are the big caps we need to be concerned about here too. So that's something to be a little bit mindful of. And the reason why I say that there's a bit of concern here is because if you look at the lagging indicator, we've got lower highs and lower lows forming. Look at that on the left-hand side, circling around it right now. Should this trend continue, we could have a little bit of a concern. However, we do have the Tenkan-Sen blue line in the short term actually rising above the baseline. So that's actually a sign of positivity. And we're also still trading above the cloud at this point. So we've got a reasonable amount of strength. On top of that as well, we are still trading above the short-term moving averages looking at the right-hand side. So we've got a reasonable amount of positivity still here, even though we do have a warning sign in relation to this lagging indicator with the lower highs and lower lows. So just keep an eye on things. If you are involved in relation to some of the big caps in terms of the Dow 30, then obviously not financial advice, but you may want to keep your stops a little bit tighter than normal in relation to this until we've got some more clarity in relation to this and would be starting to form higher highs and higher lows in the unit price again. That could be something to think about overall with that. Now, the biggest thing to also keep an eye on as well too, and I'll move across to this one, is actually the VIX as well. So in terms of the VIX, volatility, we're just continually going down, 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 down. Overall, not many people seem to be really concerned with what's going on in terms of volatility. People are bantering that term around all the time. Oh, we're in a volatile market. Things are going up, down, sideways, all over the place. Really, not many people seem to be really concerned about that at this stage. Now, the volatility index, the VIX, is a measure of the S&P 500 stocks. How many people are buying protection in terms of put options to protect their portfolio at this stage? If you see this rising dramatically and going absolutely crazy, probably well above, say, the 200-day moving average, at this point being around about 18, this is giving us a cue that people are concerned and they're buying a lot of protection over their portfolio. At this stage, doesn't seem to be a major factor right now, but do keep an eye on this in terms of the way the complacency might be setting into the market at this point of time as well, and we do need to keep that in mind in relation to things. Whilst we're here, well, let's have a look at the dollar. We'll have also a look at the Australian dollar versus Japanese yen. There's a bit of an indication of things as well too. The US dollar, very, very flat at this stage. As you can see, there's no determinant trend in any way, shape or form, and that's been ever since this Japanese yen intervention that occurred towards the end of July. So really nothing to write home about as yet. We've still got this very, very firm support level from back over in December at the end of last year, and nothing really here in terms of breaking any of these support levels or any of these short-term or long-term moving averages here at this stage either when we look at that. Taking a look at the Australian dollar Japanese yen aspect, this is usually an indicator in terms of strength of the market. As this rises, it usually gives us an indication that the markets themselves are generally trending in the upward direction. And you can see that ever since it actually bounced off this 200-day moving average here at the beginning of the month, then essentially it's actually been going fairly well, and the markets have been responding accordingly as well in relation to that. A little bit of congestion going on in terms of the cloud, as you can see on the left-hand side there with the Ichimoku curve, but you can actually see that the lagging indicator being the green line has actually now just broken up above the unit prices here in the recent couple of days. So that could actually be giving us more of an indication that we could actually have more strength coming into the market here as well, especially if we break up above the 100-day moving average being the white line here. So some very interesting times ahead should we actually have confirmation from that aspect here as well over the next couple of days. So that's the overall broad aspects of the market at this point in time in terms of what's happening with the major indices and also in terms of the aspects of the dollar, the volatility and all of those kind of aspects there. Let's have a look at Brent Crude whilst we're at it as well too, because that's been a burning aspect from a lot of people's minds, especially with the war going on and all of those aspects as well. As you can see, from the end of last week, we were basically saying that they were actually testing these areas in the volume profile areas from back in 2023. Since then, we've actually had a bit of a strengthening over the past week. And with that strengthening, we came up and tested the yearly VWAP, being this green line here, came back after respecting it. And now we're testing some of these short-term moving averages as well as this 150-day moving average being the orange line. Where we go from here, it looks as though we're actually strengthening and bouncing off those short-term moving averages and the 150-day moving average, and we could be potentially coming back up to test this yearly VWAP once again. And the reason why I say that is because with looking at the lagging indicator here, we're forming higher highs and higher lows in the short term, and we're also bouncing off both the Tenkan-sen and the baseline. However, very interesting to note that the Tenkan-sen blue line is crossed beneath the baseline, and that normally gives us an indication that we may actually have some short-term negativity, at least in for the short term. And whether that extends to a long-term trend, we need to wait and see as to what everything eventuates with here. But the biggest thing to really note is the fact that we're stuck right in the middle of this very wide cloud at this point in time. So a lot of indecision is going on right now in terms of Brent crude. And if we flip across to USO, situation is still pretty much about the same there as well. And it really gets confirmed with the fact that we're stuck under this 100-day moving average being the white line here as well. So until we get some real confirmation in terms of a breakout above that area, then we really need to basically see exactly what's going on. But in terms of an argument for the bulls, we are above both the yearly VWAP being the green line, as well as the quarterly VWAP being that pink line as well. So there is a little bit of a bullish argument here in relation to oil. And especially if you get any more geopolitical aspects as well coming through, then that can really boil things over quite a lot. Looking over at gold and silver as well too, we've been seeing quite a rise in gold over recent times, especially since the breakout past this point here at the beginning of the month. Now, overall with this, it has been tempered by the 200-day moving average, like we've been talking about in recent times as well, which was probably the area where we were going to get a bit of a test, a bit of a sideways action from after we actually got around to that particular point. And sure enough, it's actually doing that at this stage. It's coming back down now to test this 100-day moving average, which, as you can see, it's actually starting to loop upwards and potentially act as a support area. Similar thing with the 50-day moving average being that blue line, starting to turn around, coil around, and can be potentially turning upwards as well. So let's see how things go. The biggest thing to note in particular in relation to this gold chart is the fact that we are back here testing these support lines from back in October. Should all of these areas, being the support area as well as a 100-day moving average, actually hold, this would actually be very, very strong for the gold argument that we're now in a really, really firm bullish area, which is now going to be supportive for further price movement upwards, especially if we can break up above the 200-day moving average. So really keep an eye on all of this, especially with the mere fact that overall we've had a very, very nice strong move on this lagging indicator with higher highs and higher lows. Not much of a surprise, though, considering the strong breakout that we were actually talking about for quite some time over the last few weeks. You can go back to those videos as well to see how things have eventuated and unfolded over that period of time as well. In terms of silver, silver's basically been following gold's lead all the way through all of this. And we've even been mentioning as well, too, the potential sideways movement that could be occurring because gold's basically bumping its head in terms of that 200-day moving average in particular. And we're getting that sideways movement right now as we speak. It looks as though on top of that as well, with silver, we could actually still be waiting for a breakthrough with the lagging indicator through that baseline area. And that could also be another reason why we're still seeing a lot more sideways movement when it comes to silver too. Should it break through that baseline area and do it with some gusto, along with gold's move out above the 200-day moving average as well, we could then see that further leg up and really, really strong push through above all of these recent highs we actually have with gold and silver. So really keep an eye on all of those. In terms of copper itself, now Yash loves speaking about copper versus gold overall, and that basically can also lead to the technology aspect as well. So keep an eye on this alongside gold and alongside the Qs, because what will happen there is if we do get firm breakout in terms of copper and a firm breakout in the Qs as well, you may see them both go in alignment with each other, as the Qs may actually make the all-time highs alongside copper here as well. So there could be some really interesting correlations that might occur alongside each other here should things keep on going upwards. And that is a distinct possibility because the mere fact that we actually have such a strong uptrend here with the Tenkan Sen in terms of the blue line here above the baseline. So it's quite a firm uptrend in that way. But we would need to see higher highs and higher lows start forming again on the lagging indicator for one, and it would need to have that respect over here for the short-term moving averages as well, and also start forming higher highs and higher lows again on the unit prices. So observe all of these kind of things going on in terms of copper as well, and whether or not that'd be enough to push the copper versus gold ratio up again, especially considering the amount of strength that we've been seeing in gold in recent times. Looking over at iron ore as well, we're starting to see that forming higher highs and higher lows again, and also seeing respect on the short-term moving averages once more. Should that actually be enough to break it through, considering the fact that we've got the Tenkan Sen below the baseline here at this point in time, we'd need to see that flip to be able to really say that we've got positive action going on here. You'd also then need to see it actually respecting and going past this quarterly VWAP as well, to show that the buyers are starting to get back in control in relation to this aspect here too. This would really have a lot more strength showing in terms of the Australian mining market in particular, which has actually been very, very weak this particular week. And I'll show you what's been going on in relation to that too, because the All Ordinaries Index, even though we've actually had a very, very strong American market, whilst that's been the case over this past week, it has not been the case for the Australian market. And you can really see that here in terms of the All Ordinaries. We've actually really, really started to be suffering here overall. And if we take a look at, say, even the materials market, the materials index overall has really retraced quite significantly here in the Australian market as well. Whether that's actually corresponded much in terms of the energy index down here in Australia, not so much overall, but there has been a retracement because the whole market's been coming back. So that's been a major issue in terms of things. And the industrials index, though, has really, really crumbled. Keep this particular chart in mind in relation to things, because when we take a look at the sectors over in the United States, you're going to see a dramatic contrast in terms of the industrials index in Australia with the industrials index over in the United States. And I mean dramatic. It's a massive, massive contrast overall. And this is a really, really pure indicator when we take a look back at the iron aspect. And I'll bring back down to iron, because iron ore is a major, major contributor in terms of mining in the Australian market. So really keep an eye in terms of all of these charts, and really think about these as we start looking over at the United States market in terms of the sectors, which we'll do a sector breakdown very, very shortly. But before we go on and do that, we'll take a look over at the cryptocurrencies, which frankly have been exceptionally boring, apart from a couple of exceptions, which I'm going to go through in a few moments as well too. Bitcoin in particular, dead boring, but that's no real major surprise since we were talking about this on Wednesday, and the mere fact that it's actually been trading pretty much along the lines of dead beneath this particular resistance area from April 2021. Not doing much at all. It's been beneath the quarterly VWAP there as well, being that pink line, and beneath the short-term moving averages as well, and really doing sweet bugger all. It's just dead flat boring. There's no other way of being able to describe it. And on top of that as well, you can see the lagging indicator falling beneath the unit prices. Whenever you start seeing that, and also falling beneath the Tenkan Sen, there's just prescribed weakness going on. Should it fall beneath the baseline as well, we could be in some real trouble here. So really keep an eye on that for sure. In terms of Ethereum, we haven't hit those particular levels as yet. You can see that it's come beneath the unit prices, absolutely. It hasn't actually broken beneath the Tenkan Sen as yet. Should it do that, though, we could start seeing even further weakness in terms of cryptocurrencies overall. We haven't gone beneath the cloud yet. Did we go beneath the cloud on Bitcoin? We have, actually. So we're beneath the cloud on Bitcoin, and if we go beneath the cloud even further in terms of this area down here, that could sign even further problems in terms of cryptocurrencies as well. But with Ethereum, we've still got more relative strength, and we've been talking about that for quite some time in terms of Ethereum's relative strength compared to Bitcoin. But overall, you can really start seeing that Ethereum is starting to have some cracks as well too, because we've got the baseline above the Tenkan-sen. That's that red line above the blue on the left-hand side there with the Ichimoku curve. So there are more weaknesses shining through at this point in time. On top of that, we are still below the short-term moving averages here on the right-hand side in relation to Ethereum, even though we are above the 100-day moving average being the white line. But things aren't really looking all that strong. But there are some differences, and we have been covering a couple of other different altcoins as well over the past few weeks, and we've been highlighting a few of these overall. Now, Ondo coin was one of those. That is now out the window, and it really has been out the window ever since it hit that 42-cent mark that Yash had basically mentioned in previous videos. As soon as it hit that, bang, it's just fallen away, and it was absolutely atrocious. It was a great call by Yash. But some other things are actually holding up reasonably well. Tron's been trying to do a few different things here and is actually holding up at a reasonable pace. It's now struggling against this 100-day moving average, but it really doesn't seem to be finding its feet much more than this at this stage. But it seems to be doing okay. Zcoin, similar kind of situation, but I'm not really seeing all that much out of it at this point. Although, interestingly enough, with Zcoin, we now have the baseline falling beneath the Tenkan-sen. So that could actually be a sign of some strength coming through. But the thing is that I'm concerned about with that one is the mere fact it's actually now fallen beneath the 50-day moving average being the blue line. So not really all that interested in that one overall. Litecoin was another one we were actually looking at here. That one just seems to have fallen away. Wouldn't worry too much about that one, especially now with the baseline firmly above the Tenkan-sen, and it's also beneath the cloud. Now, that looks very similar, in effect, to Bitcoin, so I really wouldn't be concerned about that one. But the one that surprised me has been Chainlink. And Chainlink has really decided to actually go for it over the last week or so. Really fascinating. And with this one, as soon as it basically had crossed above the 100-day moving average being this white line, it's been on for young and old. It's actually gone really well. And the biggest thing about that as well is, look at this. If you take a look at this Tenkan-sen crossover, the baseline, that's basically been about it. And the lagging indicator crossed above the unit prices at that same time, and that was pretty much about all. Went there, and then it also crossed above some of these other indicators here as well, being the bullish indicator, and then it also further crossed above the cloud area here as well too, and then that was pretty much about it. So there are some altcoins that are actually doing something. It's a matter of keeping an eye out for certain things that actually are working in your favor. And some of the biggest indicators more than anything are really keeping an eye on these short-term indicators in terms of short-term moving averages, as well as reactions to quarterly VWAPs, and also how they react as well to, say, 50-day moving averages as well. So these could be type of systems that you may be interested in looking at even for yourself if you have a passion towards cryptocurrencies or even just general equities as well in terms of movement of particular instruments. So they're kind of things to keep an eye out for as well too. But if you can go back to certain videos as well, even in our series, and you'll know that we've actually been following these four, Chainlink, Litecoin, Ondo, and Tron, five I should say, in terms of Zcoin as well. We've had them on our watch list as well for probably a few weeks as well. It's just a matter of actually following them through and checking to see whether or not they actually cross over certain indicators of interest, and then following them through from there. So we'll leave it at that for now. But before we go on in terms of finishing off the video or anything on those lines there, let's now take a look at the individual sectors, which is something I actually promised on Wednesday, because we've got some movement in the SPY. We've got some movement in that's actually going on in terms of that actually had come back towards our short-term moving averages and then continued onwards in terms of some strength and everything that was going on with all of those. But which particular sectors seem to actually be areas of strength? And let's have a look at those, and also keeping in mind what we were actually talking about before in terms of, say, the industrial sector here in Australia, and then comparing it across to what's going on over in the US. So we'll start with all of these sectors. There are 11 of these for those who are unaware, and then having a look and seeing what the circumstances are over in the US. Commencing with the materials sector, this had a fairly decent week, but it did have a bit of a retracement towards midweek and towards the end of the week, as you can see, coming back towards the short-term moving averages after it actually overextended itself earlier in the week. But overall, we're still looking at a positive trend, as you can see from Tenkan-sen on the left-hand side being above the baseline, and we're forming higher highs and higher lows with a lagging indicator. So overall, no dramatic break of trend at this point in time, just a bit more movement, as you can see. So we've got a lot more swinging going on in relation to the price movement in terms of the materials sector. Heading across to the communication services sector in terms of XLC, this is the likes of Meta, Google, those kind of stocks in particular. And in relation to this particular sector, we've actually had a bit of a breakout above the 100-day moving average towards the end of the week, and some strength is coming into the sector now, as you can see. Whether or not we may be actually a little bit overextended from the short-term moving averages now remains to be seen. We may have a bit of a test back towards that 100-day moving average at the beginning of the week, especially as we could be contending with the yearly VWAP, as well as the declining 150 and 200-day moving averages being those orange and red lines respectively. We'll be very, very interested to see whether or not we can actually breach above this particular area here in terms of that resistance. And as you can really see as I point to that area, that is exactly where it actually got to the point there and then bounced back on Friday. So that's really fascinating overall. But some positive signs there. We actually have a very, very strong Tenkan-sen rise above that baseline and a breach above the cloud. So there could be some major breakout occurring there if we have some more follow through from those particular stocks and breaking out. The lagging indicator, as you can see, is actually breaking out above all of these unit prices as well, and even above the bullish indicator as well too, could be breaching through that area there too. So watch to see whether or not this actually breaks above the cloud in terms of that lagging indicator as well, and then that could actually have a firm breakout if we have more follow through with those tech stocks in particular in this communication services sector. Energy has been a standout this week. You can really see that from all 5 green candles all the way through the entire week. At the end of last week, this is where we were. We were smack bang on this 100-day moving average being that white line, and it has just been an absolutely stellar week for energy, and that would correspond with what we were talking about before in relation to crude oil and USO. The fact that it actually had such a strong bounce off those volume profile areas from 2023. And having that move has really shown the energy sector to be a big move. Now, contrast that as well to what we were talking about before in relation to the Australian market response in the energy sector, which was rather muted. That's been dragged back by the All Ordinaries overall as well too, and it also was dragged back by the industrial sector. Energy, materials, and industrials are the 3 largest sectors in Australia. So to have the whole Australian market actually pulling back, you can see the drag as to what's going on there with those sectors in particular. Here, XLE, I'm just trying to think how much XLE actually relates to the entire market, or just drag down, 3.3% of the whole S&P 500. So it's actually quite a small proportion of the overall S&P 500. So if you had the whole S&P 500 booming off, this would be a very, very small contributor to that in general. But as you can see, a nice contribution overall, if you want to put it that way, this particular sector would have had, especially if it was a larger weighting on the S&P 500. But crude oil itself, having risen fairly well during the week, you can see the actual effect that XLE has had. And you can see such a strong lagging indicator, higher high, higher low there, without a shadow of a doubt. And on top of that as well, it's actually been a fairly good trend for quite some time in terms of breaking itself out with the Tenkan-sen above the baseline there for quite a while. Financial sector has been performing very, very well for a very long time. And the reason why we say that is take a look at this Tenkan-sen. The blue line there, well above the baseline for a very prolonged period of time, higher highs and higher lows on the lagging indicator there as well. And we've had continual respect of the short-term moving averages and the quarterly VWAP for an extended period of time there as well since July. So a strong uptrend here with the financials, that's the banks, financial services, all of those aspects there. And it looks as though it's continuing on that way for a while. So anyone who's in those kind of areas there, keep on looking at the higher highs, higher lows until they break overall there would be the way of looking at that as a suggestion. And this is what I was actually referring to in terms of the industrial sector over the United States. Recall that chart we were talking about before where you saw that big massive dip over this past week over in the Australian market? Not to be seen here in the United States. This is the difference. So sometimes you get very high correlations between the sectors in terms of the US and Australia. Not so much in terms of that this particular week over here. So this is the kind of thing that you can look for in certain times. Other times, it just goes completely out the window in terms of the correlation. And this is an example of that in particular. So the industrial sector here did have a fairly decent week over in the United States, as you can see, respect of the short-term moving averages for sure, a breakout in relation to the lagging indicator as well, well above the actual unit prices, and you can see a very, very strong indication with the Tenkan Sen breaking out above the baseline as well too. So we've actually got a pretty good trend forming here in relation to the industrials, even though we didn't get a breakout to all-time highs or anything along those lines here with the industrial sector. We've got something that's actually showing pretty good trend overall with respect to the short-term moving averages for sure. Technology actually seems to be going pretty well as a sector as well too. As you can see, the lagging indicator with the Ichimoku being higher highs and higher lows, Tenkan Sen being well above the baseline here, also breaking out through the cloud in itself as well too, and respect to those short-term moving averages as well. So we've got a lot of positives going on here with technology as well until proven otherwise. Interestingly enough, you can actually see that we've actually got a potential resistance area here as well. Watch to see how that sector as a whole relates to that and whether or not it actually bounces back from that area as well. Could be some interesting times ahead. But if it breaks through that with some gusto, then you could actually be seeing quite a lot of interesting times ahead. Especially keeping an eye on copper, for instance, and the copper versus gold story as well. Whether or not copper just advances very, very strongly, that could relate quite a lot to the technology sector here as well. Consumer staples, well, this has been a bit of an interesting one. If we take a look where it was at the end of last week, it was stuck amongst those short-term moving averages and just above quarterly VWAP. The beginning of the week, we were pretty much trying to actually get above those areas, and then towards the end of the week, consumer staples developed some strength. The interesting thing, though, and there's a bit of a caveat, is the fact that the Tenkan Sen actually sunk beneath the baseline. So we've actually got a factor of weakness going along here. However, the lagging indicator is broken up above the unit prices. So we've got some strength there. So a bit of mixed signals going on in terms of consumer staples. Should we get some weakness in the overall markets, and that could be based in terms of, say, the Dow Jones being one of our indications of a little bit of weakness as well. We haven't got all four of the indices themselves actually rising in unison. So in terms of those factors, maybe there might be a little bit of allocation going towards the consumer staples. This is a defensive sector after all. Should more come towards this kind of sector, then we could potentially see this particular sector actually go upwards a little bit more. And this is the kind of sector where a lot of people go to in terms of defensive areas, where people who need to actually buy the things that they need in life rather than the things that they want. And that's the area that they go to for all these kind of things here. Now, interestingly enough, also with consumer staples, there are a lot of earnings at this point in time this week as well that are actually being released in terms of, say, a lot of those kind of areas as well too. So keep an eye out for those in terms of some movement this week as well. Real estate sector looks kind of familiar, doesn't it? It's just very similar to the chart that we just looked at. There was a bit of a dip beforehand. It actually bounced off the 100-day moving average in this particular case. And then after it did that, up it went. Very, very fascinating. But it looks very, very similar to that last chart that we were just looking at. And this is another defensive sector as well too. So could we potentially be getting another increase here as well? Should the market start to turn around a little bit, maybe they're feeling a bit overextended and people shift into real estate as well. That could be another possibility. Utilities, another defensive sector. Whether this develops a bit more strength as well, this is actually a lot weaker than the last two that we just looked at though. But it has actually decided to bounce off something. I'm not exactly too sure what it's bounced off. We'd need to look back further in terms of history to see what levels they may have bounced off overall. But as you can see, we actually now are trading above the short-term moving averages, and we're testing an area from back on the 3rd of November of last year. Whether we actually stay above that particular area remains to be seen, and whether or not we actually can get back above the quarterly VWAP being that pink line and above, say, the 200-day moving average being that red line as well, well, we need to basically see how that does go. But once again, being a defensive sector, if people decide to allocate into that particular area as well, that could be an indication as to people's overall perception as to what the market is doing. XLV being healthcare, this is actually looking reasonable in terms of actual a bit of strength as well. We've tested these short-term moving averages here, but there is a little bit of weakness in terms of potential for lower highs and lower lows here. That's the only thing in terms of the lagging indicator. But I also say that with a bit of a caveat, considering the fact we've actually had a decent strength trend here with 10% above the baseline. So there's a lot to consider here in relation to all of this. A reasonable amount of strength as well with some decent respect to the short-term moving averages. This is a bit more jumpy compared to some of the other graphs we've been looking at previously. You can see that there's been a little bit more plunging going on compared to the other charts as we've been testing these short-term moving averages. So yeah, keep an eye on this one. If you're in this one here, you might be feeling a little bit more movement compared to some of the other sectors. And XLY, this is, in terms of consumer discretionary, this has been a really fascinating chart, like we've actually been talking about over the last couple of videos as well. We'd come down here, looked extremely weak. We're thinking, oh boy, what's the story here with this? But as you can see as well, this was really overextended to the downside at this particular point. And sure enough, it really was. It snapped back really, really hard as well. And when it did snap back, it went completely the other way, okay? So that was really, really fascinating overall with that. The consumer came back with full force. Now it's actually up on the other side in terms of being supported by the short-term moving averages and well above all of the other moving averages completely. The buyers are in control in relation to the consumer discretionary sector. What does this mean for the market overall? Well, we've got a strong market. There is absolutely no doubt about that whatsoever. And with the strong market, it's being supported by an aggressive sector. People feel good when they actually are spending money. They're putting their hand in their pocket and they're actually taking the money out to buy the things that they want in life. So that's actually pretty good for the economy overall. Is that a problem? It could be in terms of, say, inflationary issues and all of those kind of things as well. So something to keep in mind there too. But when people are spending things on luxury goods, things that they want to spend money on, going out to eat at restaurants, buying vehicles and doing things that they want to do, going to travel, all of those kind of things there, that's good to stimulate the economy as well. Do it too much though, push it too far, that can be too much of an inflationary issue. So it's finding that right balance. But overall, good for the economy in terms of things in general. But where does this put us? Well, it is that fine balance. But if we take a look at this chart overall, well, you know what? It's now looking fairly neutral, so to speak, in terms of the lagging indicator. It's hitting beneath the cloud again, even though it's well above the baseline and the Tenkan-sen. So we've got some positivity going on. The Tenkan-sen itself is beautifully above the baseline. There's absolutely no doubt about that at all. Could this have more room to move? Yeah, it could, if it gets above this area of potential resistance. So wait and see. You can already see towards the end of the week it was trying to get back above that potential area of resistance, but it couldn't. So see what does happen. That is the big thing. People could be placing their stops just underneath this recent swing low. So this could actually be quite an area of a lot of movement, and we could basically have a bit of movement beneath this area here should these stops fail. if they're putting their stops there. So this really could be an area of a lot of movement in the near future. What could that do in terms of the markets overall? If this area fails in terms of the sector here, that could have an impact on the markets in general too. So yeah, it's an interesting balance in terms of everything overall. But that's what we're always saying here at Strategic Markets anyway. It's always a matter of taking a look at your risk levels, taking a look at your levels overall, even with your own positions, and then basically seeing what you can do with that in terms of your calculations and making sure everything works out okay for yourself there too. Obviously we can't provide financial advice, but we can do our best in terms of being able to at least provide some suggestions based on what the charts are telling us. At this point here, it literally is a bit of a 50-50 for this particular sector, but it is giving us a little bit of advice in terms of where things could go and how you can position yourself to take advantage of it. Would you put all your eggs in this particular basket? No, not at all. But there are other sectors that you can also look at here that have a bit more strength that you can actually work with as well too. So some very, very fascinating aspects. But I hope that's helped in terms of different sectors to take a look at, in terms of different areas where people could be moving their money in terms of the sector rotation that's going on as well. But do remember as well, this particular week, there are a lot of earnings still coming through at this stage as well too. So really keep an eye in terms of a check of everything that's going on too, as to how those earnings are relating to your holdings and whether or not any, say like for those who are based here in Australia as well, whether any of those earnings are also related to your own holdings too, especially if they relate to, say, retail, or if they relate to home builders or anything on those lines as well too, because there's a lot of those actually being released this week. But for now, I'll leave it there because it's covered quite a lot of ground and the video could be extending quite a lot. So I'll edit that and I'll get that out as soon as I can. But until then, leave you with all of that and we'll see you again on Wednesday. Thank you very much for all the support that we are getting through on the channel as well. Thank you to Mark, who's always very, very great with his comments in terms of in the public arena, but also thank you to those who are contacting me privately as well. I really do appreciate that. Feel free to make it public if you do want to, and I do understand for those who don't want to make it public, so that is quite okay as well. But thank you very much for all of the support that you are providing, and it really, really does mean quite a lot to both Yash and myself. So it does give us a lot of inspiration to keep on going. But leave it for there for now. Catch up with you again on Wednesday. And in the meantime, all the best with your trading for the week. See you again soon. And thank you very much for watching. Bye for now.